Yo, 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 what's up, guys? Welcome back to another Thompson 2 Cents. I'm your host, Larry Thompson, resident CMT, and sometimes I'm one of those boring CPAs. But today, there's nothing boring about the show. We're going to be talking about the bull market and its next steps. I first just want to give a shout out to the chat. I see those in the chat. I appreciate the love. Last week's show did great. I appreciate all the feedback you guys give in the comments and the likes. That stuff is much appreciated. All right, I'm doing this on a Friday afternoon because I love it. It's 5 p.m. I could be anywhere, but I'm here with you, and vice versa. You guys could be anywhere, but you're here with me. So I appreciate the love, and let's get to it, okay? Let's kind of rip through some charts, talk about the market a little bit, kind of get to the theme of today's show. So bull market's next step. What I want to do here first is kind of start with, honestly, this quote to me probably underlines my entire process for investing and for my investment research that I share here. So this is a quote from Annie Duke in her book, Thinking in Bets. I highly recommend it. I was talking this morning with JC Peretz about it. Shout out to JC. And this is a book he recommended a few years ago, and I read it, and it's kind of stuck with me. Now, audio, if I'm on a long car ride, I'll throw it in. But this quote is just pertinent in my everyday life and in my investing life. So what makes a decision great is not that it has a great outcome. A great decision is the result of a good process. And that process must include an attempt to accurately represent our own state of knowledge, that state of knowledge in some variation of I'm not sure. So think about that. The things that stick out to me with this quote is good process, right? So a process involves doing the same thing over and over again. It involves repetitiveness, right? Kobe Bryant talks about that all the time. Falling in love with the boring, right? From an investment perspective, we talked about Tim Hayes last week and kind of how he talks about understanding where the market is, right? And what the market is doing is more important than why. That's the state of the market. So accurately attempt to understand our own state of knowledge, the present knowledge we have of the market. The best way to do that is via price analysis, is via intermarket analysis, is via technical analysis, right? And then at the end of the day, it comes down to the fact that we don't know. I'm not sure where the market's going to go next, right? I have done my analysis. I have developed a good process, which we'll go through today, and I'm placing my bets in a certain direction based on that analysis. But the reality is we're not sure. But every decision we make, we're not 100% sure about. But this is the direction that I believe the market is going, which is up. So let's kind of get into it today, guys, and break it down. So I want to start with kind of an overview of the past couple of weeks, because once again, if we're talking about a process, it's not about clicky head titles today and all this fun, exciting glitter and gold. It's what have we done the past couple of weeks, right? What are we continuing to improve on, right? It's watching film, rewatching what you've done, kind of improving from it. We talked about the shake and bake. This is 2 weeks ago, shake and bake. So if you guys haven't watched that video, I recommend going and watching it. The shake and bake where the bears were getting cooked. And the chart I shared there was S&P 500 equal weight. This is kind of one of those bread and butter charts, right? Talking about the process that I look at every single week. And this was a chart 2 weeks ago, right? We had that shake down here near the lows and then that bake, right? That slingshot and engage. If you guys haven't seen Ricky Bobby, what are you doing with your life, right? Turn on Ricky Bobby this weekend, Talladega Nights with Will Ferrell, and watch that movie. And the shake and bake reference will stick out to you. But we had that shake and bake, right? That's step one. You have those false breakdowns where breakdowns fail in bull markets. That's kind of step one. Then the following week, right? This past week, we talked about breaking down breadth. Which once again, like I said, that video is one of the best videos I've done from a views and likes and comments perspective. So I really do appreciate you guys in the chat. I see you guys right now freely. I see you, Nicholas Trades. I appreciate the love you guys share. And the chart I shared there was, right, equal weight S&P 500, and just seeing we're kind of coming into potential resistance and that I wasn't heavily placing bets yet. We had the Fed meeting come up, and I wrote an article on Monday called I'm Not That Guy, because I'm not the guy that's trying to predict the future. I'm the Annie Duke of the world. I'm trying to lay out a process, understand I'm not sure, and swing my bat when it makes sense. And then we come to this week. And what do we get this week? This is the next step of the bull market, right? The next step is new highs expanding. You have the whipsaw, the shake and bake, okay? Then you have the run up into maybe overhead supply, kind of consolidation, kind of indecision on the backs of the Fed about to speak. Then you have the ripper to the upside. And that's what we got this week. We had this expansion in new highs. This is as of yesterday, right? Today's data isn't in here, but the market shaped up okay today, right? Tech drove down the market today, but overall, if you look at the breadth analysis, the market looked good. And then if you look at a weekly, the market looked good. So I'm not going to overanalyze today. That's not my process. So that's not what I'm going to do. Even if the market's up huge on a Friday, I don't overanalyze it. If it's down on a Friday, I don't overanalyze it. I focus kind of on the big picture and where we've come from. So persistent new highs. Okay, we had new highs this week that we haven't seen since, mid-July this year, right? This is the second most new highs we had this entire year. But what we've seen under the surface is persistent new highs. So it's been good to be involved in the market. But now we're kind of seeing new highs break out. And you're seeing that through tons of charts that I'll kind of get in today. And the point of me showing you this chart is people might start to see new highs and think, man, that's it. We're getting in the year end. This is the top. This is kind of when the market's going to kind of take a chill pill and when it's going to chill out. I'd say not so fast, young one. Zoom out. Zoom out and understand we could just be getting started. We really could just be getting started when it comes to breadth expansion underneath the surface for the S&P 500. So look here. You zoom out and you see 2024 was a year. These new highs look like nothing. We had 120 stocks making new highs in a single day, right? That is persistent, voracious breadth expansion. And we're just starting to scratch the surface. So that's the trades I'm going to be looking for is breadth, expansion, breakout trades. And so we'll kind of get into that now. Look at equal weight, right? We had the breakout. S&P 500 equal weight had a pullback today. That's a blessing, right? Primary uptrend, fake out, breakout, right? Pullback. I'm buying this, right? This is not investment advice, but this is what you want to buy. Now you have really clear risk reward here in this chart, right? Well-defined risk against those former highs. You stay long against those former highs. We get back in this range. Okay, we're going to take a chill pill. That's where I'm not sure. That's where we draw our line in the sand. That's our poker hand that we're looking at. But right now, it's a pretty good bet. Above key support levels, kind of had the confirmation. Yes, these past 2 days, and now we're kind of consolidating sideways, which is fine. It's not a big deal if that happens with the market. The next thing I wanted to talk about a little bit, here, I'm going to do something real quick with these charts. I reorganized them real quick. Is I want to talk about, this is kind of going to be nuanced, so I'll kind of go slow, but you can put it on 1.5 speed if it already makes sense to you. So this is the equal weight S&P 100, and this represents 75% of the weight of the S&P 500. So as we've talked about in the past, the S&P 500 is market cap weighted, so it can kind of mask what's going on under the surface. And because of that, you have to develop tools, a process, right, to understand what's going on underneath the surface, the state of the markets, right, the state of your knowledge that you know about. Even though you don't know the future, you can know the present pretty well with price. And so S&P 100 equal weight is breaking out to all-time highs yesterday with a little bit of pullback today. It's only down 20 basis points. Basis points, fancy way to say 1/100th of a point. So 1/1700th of a point. So 0.17%. Sorry for the jargon. But breaking out a little bit of a pullback today. This is a buy. So when you see the index kind of struggling a little bit and you see something like S&P 100 equal weight, the narrative that large caps are failing is a narrative. This is literally showing us that yesterday, the 100 largest stocks in the S&P 500, equally weighted, made new all-time highs. Large caps are doing just fine. Well, then why is, something like OEF, which is the market cap weighted, not looking as good? Well, let's dig into the data, okay? So we have the data. So this is the S&P 100 1-month change. Okay, so on this y-axis, you have the historical price change for the past month, and then on the x-axis, you have the holdings weight. So what you have here is right? To the far right is stocks that make up a lot of the weight of the S&P 100. To the left, not that high of a weight. Stocks that are to the upper end of the boundary, to the y-axis, largest returns, bottom side, smallest returns, right? And so X, Y-axis, if you ever get confused with this, is a fun little trick I remember. X-axis, make an X, right? Y-axis, make a Y. Fun little trick. So what I want to point out is that the irony of this is it's really just a few stocks that are dragging the market down, right? The market down, dragging, making it look like large cap stocks are struggling. It's only a few names, but it's the largest names. It's Nvidia, down almost 10% over the past month, and it's a 10% weighting. Microsoft, down almost 7, 8% this past month. It's almost an 8.5% weighting. Amazon, 5% weighting, down almost 10% this past month, right? You have some larger weightings here. Almost 1% of the are down. AMD, which is Advanced Micro Devices, Netflix, Oracle. These, and then Avago today, right? Avago's not on here because this is as of, Avago, gonna rate here. So what I'm showing you is the fact that it's masking the fact that, look at the strength underneath. A lot of stocks in S&P 100 are doing just fine. It's a select few that make up the large portion of the market cap weight that are struggling. Next chart, right? This is the EQWL, the S&P 100 equal weight. And what do you see? The weightings are very equal. And what do you see? You see a lot of charts right in the middle doing just fine. Okay, you see a lot of average, I don't want to say average performance, but very normalized performance kind of clustering around this 1%, 1.5%. And that's where this chart, like the equal weight 100 chart, makes a lot of sense, because there's actually breadth expansion occurring underneath the surface that's being hidden by a few select names that are struggling, which is ironic because I thought it was only a few stocks that were holding the market up. Now it's only a few stocks that are dragging the market cap weighted indexes down. And this is the beauty of technical analysis. This is the beauty of studying the market, is you don't have to sit in those market cap weighted indexes. You can go underneath the surface and say, hey, I want to be a little bit more equally weighted. I want to be a little bit more diversified away from this tech heavy, or right, this tech heavy kind of exposure that's not working right now. And you do that over time, you could do pretty well in the market. And so the concentration risk is showing itself. So that's what I wanted to kind of talk through. So when we talk about that, right, underneath the surface, right, S&P 500 kind of a little tech, a little choppy. Financials breaking out to all-time highs, right? The charts within financials look amazing right now. Look at American Express, Bank of America, Capital One Group, JP Morgan looks good, Goldman Sachs looks good, Wells Fargo looks good, Citigroup looks good, Goldman Sachs looks good, right? Those stocks look great, and they don't make up, some of those don't make up a large enough portion of the market where financials breaking out to all-time highs can get masked. Right? Not as much as our next chart, industrials, but this behavior can get masked. So dig underneath the surface, because these breakouts are working, and they're working well. Industrials, similarly, we're in this breakout phase. We're buying breakouts, especially these ones, right? This breakout today, right? Financials broke out, the market was down, financials were up, showing some relative strength. Buying stocks in the financial groups all day. Industrials, similarly, right? Breakout, kind of pulling back a little bit, but you have really well-defined risk. These are the type of setups I want to be buying all day, because we know where we're wrong. And if we get whipsawed back into this range, we get whipsawed back into the range. But now we have really well-defined risk. We had really well-defined risk during that shake and bake moment, and then we rode that, and then we waited until the next breakout, and then we're adding exposure again. So financials, industrials look great. Something like healthcare, right? Not at all-time highs, not breaking out to all-time highs yet, but had this pullback, and now it's kind of regaining its footing. All of this, once again, being masked by Avago Broadcom being down today, being masked by Nvidia and Microsoft and Amazon kind of struggling. Underneath the surface, there's a lot of things doing well. All these equal weight spaces are doing well. And that's why people are talking about small caps doing well. But to me, it's a market of stock story. It's not a market cap story. And I mentioned this morning when I was talking with JC, is that I rather trade names within financials and industrials and large cap healthcare and even consumer discretionary because I can get leverage on options in these spaces, or I can trade a 2x, 3x maybe leverage instead of having to play the single stock risk or a 2000 stock risk of something like small caps. So that's kind of how I'm thinking through it. And then to add to that, something like consumer discretionary, this is just about to break out. So if we have every other area of the market breaking out, right? With the exception of some of those strong names. You think within consumer discretionary, these names are probably going to be breaking out soon. And this is on the backs of Amazon kind of struggling, on the backs of Tesla kind of struggling a little bit, sideways-ish price action, right? They're not struggling on a longer time frame, but on a shorter time frame. So names within consumer discretionary, another place I'd be looking because these breakouts are going to continue to show up if we're entering the next phase of the bull market. That's the only choice the market has, right? Is if it's on the verge of breaking out, going up in price would then lead to new highs. So once again, you're thinking through that process and it really does start to make sense. So let's get into a few individual charts here and then we'll get out of here. But essentially, Bank of America, right? Financials, base, breakout, little base, breakout. Leadership within financials overall. Citigroup, another great one. Wells Fargo, another great one. I'm not going to bring 50 charts. You guys can do some homework this weekend to kind of look at those charts. Wells Fargo, another great one. Banks across the world look great. If you're not interested in investing in a single name in the banking space, something like KBWB, that's the ETF, also looks great. KRE, the regional bank ETF, if you do want to kind of go down the cap scale for some reason, KRE kind of has some pretty well-defined risk you can take risk against. And then something like American Express, which I believe I brought that chart. Might not have brought American Express with me. There we go. American Express. So once again, base breakout, right? And then breakout to new highs. And then you kind of had a little bit of a pullback today. Once again, I think American Express is another great name you can take a look at within financials because I think this theme continues. I think you continue to see that breadth expansion, healthy rotation, which on the surface might not look healthy, but that's where I love to champion technicals because I think that's where technicals can really shine. And then let's get back to the slides here. Sorry guys, 1 second. Having a little issue with my slides. There we go. All right. Industrials, right? So I was talking through industrials a little bit. Names within industrials that I think look good. You have jets. You have a lot of the airlines look great within it. So Love, LUV looks great. NSC, which is Norfolk Southern, looks good. General Dynamics looks great. It's kind of pulling back and about to break out. AME, Amtech looks great. SPXC, which is kind of a small cap weighted industrial name, looks great. So this weekend, what I would do if I was you guys is I would run some scans, maybe look at filter your stocks by distance from new highs or distance from 52-week high, and you'll kind of see stocks that are sitting right below. Those are probably the next stocks that are going to be breaking out, or you can buy some leadership underneath the surface because I really do think this chart here, even though it looks like, oh, we might be getting frothy, I think it's just getting started. I think these breakouts are just getting started underneath the surface, and I really do think that's the next phase of this bull market. So with that, guys, that's my note for this week. Buy the breakouts. That's my 2 cents. That's what I'm going to be doing. And let me know what breakouts you guys are buying in the comments. Like and share this post. I put out work every week for free. All of this is for free for you guys. Like I said, I just love doing this. So if you guys could just give this a like, give it, a comment, something, maybe troll me a little bit. Maybe my haircut looks bad. But yeah, I appreciate the love. I see there's a couple things in here. Loads of breakouts. Nicholas trades. Correct. Yeah, I see breakouts all over the place. This is confirming it. Thoughts on IGV. So software, actually, I just had the software chart up. Software is a space of the market that I think is just to me, it's not my favorite trade at the moment. I kind of talked about it a couple weeks ago. I don't love the look of the chart overall, especially with what Bitcoin's doing. I don't think it leads Bitcoin. Let me download this chart and then I'll pull it over. I don't think it leads Bitcoin or anything like that, but overall, I just don't love the looks of the chart. All right, I know I'm gonna be messing this up. Yeah, this isn't gonna work. Gene, I'm gonna share a different screen real quick. I'm going off the rails here today, guys, just for the chat. For the chat, I'm going off the rails, so you guys better give this a like. So I'm going off the rails, making it hard on our editors, but I see you guys want to look at some charts. So software, right? I don't love the looks of this, right? You kind of have this base, and then this hasn't reclaimed these highs, right? Everything else is breaking out, and this hasn't really reclaimed this highs. It reclaims 110. Nicholas trades, I'm in, right? Reclaim 110 and I'm in, but maybe we make a higher low here, something like this. I'll kind of draw it in real time. All right, something like that, and then we break out. But overall, I don't see a reason to get in until that happens in something like IGV. So yes, we're above the AVWAPs, agree. We're below the 110, agreed. So that's kind of how I'm looking at that overall. So yeah, next week I'll leave a couple comments if you have any other charts. Next week I'll kind of break down some charts, and I think next week we're due for an all gas, no brakes, 20 charts in 20 minutes. I think that's what we're due for. So much love, guys. I appreciate y'all. Y'all have a great weekend, and be buying the breakouts because that's what I'm doing. Thanks. Cheers.